I want to turn now to the economy is the number one issue for a lot of voters as we head into this presidential election year. Friday's jobs report was by all accounts a strong one. Overall, the economy added 303,000 jobs in the month of March, and the unemployment rate, well, that ticked slightly down to 3.8%. The key sectors seeing the biggest gains right now are healthcare, government jobs, leisure, and hospitality. We want to welcome in this morning Reade Pickert, who is a Federal Reserve editor with Bloomberg and familiar face to our viewers as well too. Mark Avallone joins us once again. He is, of course, the founder and president of Potomac Wealth Advisors. Good to see both of you. Thanks for coming in this morning. Let's get to it. The jobs report, they were expecting the numbers were going to be good. I don't know that anybody expected the numbers were going to be this good. So what do we make of this?
So it was an excellent report, both on the top line and a lot of the details. So it topped all economists' expectations in a Bloomberg survey of forecasters. It was the biggest job gain in nearly a year. And on top of the great things that you mentioned in terms of where we saw those job gains, we also saw more people enter the workforce. So we saw more people come off the sidelines and come into the labor force to hopefully fill some of these jobs that businesses are still trying to fill.
So, Mark, when we see these numbers, you know, we see things moving in the direction they are moving. We still look at a lot of this polling that says that people don't feel that the economy has been making the progress that it should. Could this change that?
Well, a great point, and it's a very interesting dichotomy. There's a real separation between what's happening, low unemployment, very strong wage growth, and yet a depressed view on the economy. And I think it's because the legacy impact of the prices people are paying. And inflation is slowing, but that's year over year. Relative to 2, 3, 4 years ago, prices are very elevated. And until that goes down, until people feel like prices are under control, they're still going to have a negative sentiment about what's going on.
Reade, anybody who's been following the Fed the last couple of months, it's almost been like waiting for Christmas morning. You know, we know it's coming. It's this rate cut that we've talked about so far, but again and again and again, you know, the Fed has said, yeah, we're going to do it, but not right now. Yeah, we're going to do it, but not right now. How soon is now, based upon what we see in these numbers now?
Well, now is certainly not at their next meeting. Okay. And we've heard from Fed Chair Jerome Powell that, you know, a strong job market in of itself isn't enough to delay rate cuts, that really what they're looking for is further progress on inflation. But the longer that the economy is honestly killing it, then the harder it is for the Fed to, you know, think that it's time for rate cuts, and, you know, really need to see the type of downward trend in inflation that we saw at the end of last year. You need to see more of that this year, because we haven't seen that this year. We've seen this pickup in inflation in recent months. But there's
been a party going on Wall Street of late, Mark. Does it get to a point where if this doesn't happen, the streets at some point is going to say, no, wait a minute, we're not going to keep, you know, rising the market until we see actual concrete action that this Fed cut comes through? It's
very interesting, and both parties are looking at each other, right? If Jerome Powell sees stocks at an all-time high and housing prices high, asset prices high, you also don't want to cut in that environment. It's not just wages and low unemployment. It's asset values are everywhere. And Wall Street's been expecting this cut. At this point, I don't think Wall Street needs aggressive Fed action. What Wall Street needs is earnings. If the stock market doesn't justify its current valuation by companies making money, this AI craze manifesting itself, and companies' bottom lines improving, that would be the weakness for the stock market. I think it's less the Fed and more about earnings.
Joe Biden certainly isn't the first president to be bedeviled by inflation, you know, going back to Richard Nixon, Gerald Ford walking around with a win button on his jacket in the mid-'70s. What does it take in reality, though, for people to start changing their feel about this economy? You look at these job numbers, would it take somebody, you know, maybe having a job that they didn't have before? But is it the prices at the supermarket that drive this? Because these numbers are probably moving in the direction the White House wants them to move, but the numbers in this polling about how people feel about it are not moving the way they want it to move.
So from the perspective, it's very much this price level. I mean, you remember what you paid at the grocery store time and time again years ago, and when you go now, you see that that's very much not what you're paying. So, you know, very much until your wages start to catch up there. But we have seen some improvement among consumer sentiment. So because, you know, having a job, a paycheck coming in, that's now at the current moment keeping up with inflation, even though it maybe hasn't kept up with inflation over the last several years. But seeing that kind of progress there, though still that price level and interest rates kind of sucks the oxygen out a little bit.
And the daily reminder is that the oil is at the gas pump. And energy prices are on the rise. So this administration has its work cut out from a lot of it cannot control because what's happening in the Middle East, supply chains with the energy sector is still going to be a factor, always is in November.
The pocketbook always rules. Mark Avallone, Reade Pickert, great to have you both at the table live this morning. We appreciate you coming in. Have you back, talk about this as we continue.